I'd like to welcome everyone to another, I think, highly successful Miami Finance Forum breakfast event. There are a few people I need to mention, or groups. HSBC is our annual sponsor, and we're very appreciative of them. The Conrad, where we put on all our high-end events, is a phenomenal host to us, and we're very appreciative of them. Cherry Becker is a sponsor and also has supplied us with a star to be our moderator. And frankly, with that, I'm going to turn it over to Scott, Scott Moss is managing partner at Cherry Becker, and I think going to help run a great event. So without further ado, Scott, please go on.
Thank you for being here. Great turnout. I think we've got some great panelists here. Certainly a very intriguing and timely topic given the state of capital raising and M&A. What we would start with is we'll just go down the line and let each of the panelists introduce themselves, tell a little bit about their background and what they're doing currently.
My name is Marco Ziverti. I'm an entrepreneur and an angel investor. I started my career at Apple Computers, and I worked there on the Latin American marketing department, and I quit to start my own company when I was pretty young, dreaming about building a publishing company in Latin America, and I started with that venture, and we created 3 different companies. One in publishing, B2B publications, a separate company on events, trade shows and conferences, and a third company ran internet during the first battle in the 90s with e-commerce sites in partnership with TV stations. We sold those 3 companies to 3 different strategic buyers, which means we saw the movie from start up to the very end. And I moved to Miami 11 years ago, and when I started my last earnout on the last company, it was the events company 5 years ago, I realized 2 big things. One, that I wanted to stay in Miami in the long run, and 2, that launching and starting early stage technology companies here was not as easy as it should. And I came back to angel investments. I did some in the 90s, and I started my own small investment vehicle on early stage technology companies around digital media, online education, event technology, things that I understand from my previous life. And I created this portfolio of 29 investments around those sectors. And some of those investments are here in Miami, some investments in Latin America, and some investments in the Valley and in New York.
My name is Greg Beatty. I principally work for, my firm is Hamilton Lane, which is a large private equity asset manager. About $175 billion in assets under management and advisement. My primary role is with the Florida Growth Fund, which is now $500 million. We started off with $250 million, but invested that in about a 2-year period of time. And we're on our second tranche of $250 million. And we are a fund that has one LP, the state of Florida's pension fund. And the idea is for the state's pension fund to be able to invest in their local businesses. And so we're the manager that they pick to manage that. We now have 45 different investments in our portfolio, split between fund investments and direct investments. We do make venture capital investments. We made 3 pre-revenue investments early on in the life of the fund, but we're not focused exclusively on venture. So we do everything from early stage venture to late stage buyout. One of the things that I'm most proud about with the Florida Growth Fund is we've been able to attract, or help attract, 2 high-quality life sciences investment firms to not only open an office here in Florida, but to open an actual fund dedicated to Florida and to the Southeast. And so MPM opened their Sun States Fund about 1.5 years ago, maybe 2 years ago. And they're very active in the life sciences community here. And then Saki Nova opened HealthQuest Ventures, and we were in both cases, we're their largest investor. So one thing that I'm going to challenge everybody out there is we'd like to do that with an IT investor. We'd like to to attract a high quality brand name IT investor to come to Florida and set up shop, not just with an office, but with a fund dedicated to the Southeast. And so if anybody has any ideas, and I've talked to a couple people before, but that's one of our top goals with the Florida Growth Fund.
Morning, my name is Albert Santalo. I'm happy to be here on this panel with unanimously all my friends of mine. So it's an honor. I'm an entrepreneur and an engineer by background. In the early days of my career, I was in the banking industry, and then I saw healthcare for the first time about 20 plus years ago. And I kind of fell in love with solving that problem. My current company is called CareCloud. I'm the CEO. The company is 5 years old, and so it was founded in January of 2009, which was not the greatest time to be raising money for a company, but we successfully raised in 2 rounds of angel investment about $8 million from the local community, which most people think that that's a lot of money. Even in Silicon Valley, they think that's a lot of money to be raising from angel investors. So we're very, very proud of that accomplishment. And that really got us going. In 2011, we raised West Coast Venture Capital from Norwest Venture Partners and Intel Capital. And then most recently, last year, we raised a $30 million Series B from Tenaya Capital, Adams Street, based out of Chicago, and then our existing investors also participated in that round. Our business is really, if you think about healthcare, it's the largest industry in our economy. It's highly dysfunctional, and what most people don't know is that it's dominated by very, very old technology, some of it dating back to the 1960s. And so what we are doing is re-platforming the industry with a modern cloud-based underpinning. That's not easy to do, but it's been very, very well accepted by the healthcare community. Most of our clients today are physician practices, from small to large across the United States. The company has been on a track of growing triple digits every year, and we hope to do that again this year and into next year.
Hi, I'm Dr. Susan Hawk. I started the Launchpad program at the University of Miami. I'm a serial entrepreneur. Right now, I'm running Venture Hive, which we founded January of last year. In Miami, we're best known for the accelerator and incubator programs we have in an awesome building down the street because of support we received from the Miami Downtown Development Authority and Mayor Jimenez. Our program is very different than the normal accelerator incubator type things because we focus on the individual development of the companies rather than just the companies doing well. So it's really about creating people, leaders who can execute on a big vision instead of just making sure they have a good pitch and a good business plan. We don't take equity from the companies, and we recruit them from all over the world in verticals so that it makes sense for them to be in Miami, and bring in the private sector to support it so that we are creating an ecosystem from scratch in a lot of ways. Our company internationally, though, is known as an entrepreneurship education company. We work with the U.S. State Department and the World Bank, literally all over the world, to help governments build ecosystems. So we do university, K through 12, and then accelerator and incubator programs for other countries as well. Thank you.
Good morning. My name is T. Gray Wenrick. I'm a recovering management consultant. I moved to Miami about 11 years ago. Decided to reinvent myself. Got involved in a number of different small private businesses, mostly brick and mortar. And then in 2009, I met the founder of Open English, which at that time was a dozen people working in an apartment in Caracas, Venezuela, which is probably not the place that you would select to start a new business that you wanted to raise $100 million for. But that's what he did. And he was moving here to Miami with vision of making this the headquarters for a regionally based business. And so since then, over the last 5 years, we've raised about $120 million of venture capital in 4 different rounds, starting in 2010 with a family office from Central America and a Boston early stage fund called Flybridge Capital. And then subsequently from Insight Ventures in New York, Redpoint, and TCV from Silicon Valley, The last round was just exactly a year ago. We raised $65 million. So the business has grown triple digits every year. We have about 100,000 consumers in Latin America now learning English with Open English, and it's been a pretty wild ride. And so we've kind of gone the spectrum of VC firms, from angel investors even to very early stage firms to growth and crossover funds. So the last 5 years gotten to know the segment pretty well.
All right,
I
fantastic.
just want to say that I've been on this panel for venture before, for the Miami Finance Forum, and seeing the interest in this topic just by the people in this room is an amazing testament to what's happened here in South Florida, to the technology community, to the venture community, to the startup community. Success stories like Carrot Cloud and Open English, those are becoming not the exception but the rule, and the more success stories we have like that, the better it's going to become. But I just have to say that because it's just remarkable the difference that I've seen in my tenure here in about 4.5 years, 5 years. Unbelievable. So great to Miami, what Miami's doing and attracting entrepreneurs and venture and so forth. We have a long way to go, but things are looking better every day.
You know, private equity, venture capital, you know, very, very different experience having one of those firms invest in you. You know, private equity tends to be much later stage. They expect a different kind of return profile as well. So, you know, typically they invest, 3 to 5 year time horizon and expect, 3 to 5 times their money back. Venture capital invests earlier, trying to get a much higher return than that, trying to drive a 40, 50% return on investment, internal rate of return, and tend to be more nurturing in terms of, or hopefully they are, in terms of helping entrepreneurs build companies, whereas private equity firms tend to come in, be very discriminating about who the management team is, many times put in their own, and really just try to replicate an existing model and drive as much profit out of it, whereas venture capital probably not as concerned about profit, but more just about increasing the stock price more than anything, and many times that comes with very, very heavy losses, actually.
Greg, you mentioned some of the changes that you've seen in South Florida. For the people on the panel, do you have a feel as far as what's happening in South Florida today? Is that consistent with what's happening in other major metropolitan markets throughout the U.S. and throughout the world? Or is South Florida kind of unique and different with what's going on here right now?
Well, I think what makes South Florida unique is that everybody wants to live here. Not everybody wants to live in other places that are trying to create a tech community, so to speak. So, we just have a great place to live here, and so that's helping. I would say that one of the mistakes that a lot of regions make, and one of the mistakes when I meet with local officials, everybody's trying to duplicate Silicon Valley, and you're never going to do it. So don't even try. Why try to be Silicon Valley? Because it's never going to happen. What I really like about what Venture Hub is doing and Susan is doing is that they're focusing on verticals that are important to this community. And that's one of the other lessons that not that I'm full of knowledge, but I try to get local officials to say, why try to be all to everybody? You can't be the entire tech community, but you can be certain things that are really good. So Latin-facing, Latin America-facing, South America-facing companies are perfect for Miami. And what's started, the STEM, I guess, has stopped. But it used to be, if there was a company here in Florida that was pretty cool, Venture would invest in it, so you got to move to Boston, you got to move to Silicon Valley, and that tide is stemmed. That's not happening anymore, because why would you want to move Open English to Silicon Valley when they need to be close to their markets and so forth? So one of the things that has been good is that I think businesses that are starting up have been more focused on what is great about South Florida and Florida in general.
We want to create real sustainable businesses that have a great value proposition that's made up of a team of people who are going to be able to execute and go the distance. And at a certain point, if they need to be replaced by a professional management team in whatever way, they have the humility to be thinking about long term instead of their pride, etc. So, problem solvers who have that humility.
Everybody on the panels talked a little bit about the different strategies in kind of once the investment is made, the day-to-day level of participation with venture capital as compared to private equity. How about from an angel investor perspective? Are the angels even more involved and kind of more coddling than their counterparts in the VC world? Is it kind of a progression that an angel investor will typically get very involved in the business? The VC kind of now starts to put systems, processes in place, provides that funding for future growth and expansion, and then the PE is kind of the harvester of the business. Is that?
I see it as a partnership. Basically, sometimes I get calls from VCs inviting me to join around with them. I just did an investment in the Valley with 4 or 5 big VCs, and they call me as an industry guy, adding value from an industry perspective. That's one example. The opposite, I call VCs many times and said, look, I'm syndicating a deal with 4 or 5 angels. We complement each other from different skills, but we need a VC in terms of accelerate growth. Going back to Tigre's comment, usually VC money should be growth money to accelerate the business up to a point where the business is attractive for private equity guys, or from my perspective, attractive for strategic buyers. That's where I see the added value. There is another business that I see happening more and more in Miami, which is also pretty positive, and is Miami as a gateway for European companies coming into the Americas. We saw that happening for the first time last year. We did a small conference with support from the Knight Foundation in December in partnership with some European guys around tech, media, and innovation. And we saw 20 or 25 European companies, but these are no longer startups. These are 40, 50 million euros companies thinking about rolling out their business into the Americas. When they see Miami as a gateway between North and South America, cost of talent is significantly more affordable. Access to the network into US and Latin America is pretty attractive. They see that opportunity, but they don't want to do that alone. They want to do that with local partners, and those partners could be local investors, VCs, or people who, again, will accelerate that business. That's another angle that I'm seeing here, and as an angel or a VC, we can play a pretty interesting role helping those companies to roll out their business into the Americas on a fastest and more efficient way.
I think sometimes entrepreneurs are more concerned with valuation than they are with building a partnership. And this is not private equity, a buyout where it's kind of hands off. This is a partnership. You're trying to, you want the best, smartest money that you can attract. And I think there's also been a shift here too in terms of the angels. There's so much capital, so many successful people that have moved to Florida for various reasons, getting them off the sidelines and saying, get involved in my company. I've always challenged entrepreneurs to go out and find somebody that could be critical to their companies. And it might not be a normal angel investor, but there's somebody with industry expertise to their specific company. And they're here. They're all up and down. They all want to live down here. So sometimes it's more important to think about who you're going to partner with as opposed to the valuation and just the fact that it's money.
So we have 31 companies in Venture Hive altogether. Half have received some level of angel funding. 10% have received Series A. And I can tell you, I mean, a lot of the angel investors are not based in Miami. They're in Atlanta, New York, all over California and Latin America, actually a couple European. Most of the angels are extremely involved. Weekly calls, even the ones who aren't here, they do play a mentoring role because we specifically work with our startups around making sure they're not just taking money. We want them to take smart money that's going to be involved and provide that value added, provide those strategic alliances, provide all those other things. And it's really key. And I can tell you on this panel, everyone in here has mentored and been involved with our companies. And that's, I think, one of the things that's going to help Miami grow and really be able to become a great tech scene. The fact that Open English, all of the founding executives of Open English are now investing and mentoring and really getting involved. When Albert finally exits, I know he's going to be one of the best investors for our community. I mean, these are people who really care. Gustavo from Hamilton Lane is in there mentoring our companies to make sure that they know how to present to people one-on-one. Because pitching is great, but those one-on-one communications, when you're sitting with somebody, you're not going to go up and have a PowerPoint. It's all of those little things that it takes a long time to build entrepreneurs to be like that when it's not the norm in the community around them to have that level of role model or people providing that expertise.
My name is Michael Thompson from Kroll, and the speakers spoke a little bit about reasons why you invest is because you have chemistry or you think the person's a good person. And I was wondering what sort of reputational due diligence you do on the entrepreneurs, if any.
I was going to say for VCs, for institutional investors, reference checks are always part of their due diligence checklist, and it's actually the only time in my life where I've given a list of references and they've actually called them. Yeah. And they'll call the ones that you give them, and then they'll also call the ones that you didn't give them. So they definitely spend a lot of time looking into your background and talking to people about you.
And in my case, probably 80 or 90% of the investments are through referrals. Previous entrepreneurs that I invested before or partnered with them before. And as Susan was saying, it's such a small community. On a global basis, you can network through LinkedIn or AngelCo or similar networks and talk with a friend of you who knows that guy. And reputation is getting easier from that perspective. And we invest a lot of time talking about those guys with people who knows them well. And also what I do all the time, I try to syndicate with other angels just to be sure that I'm not the only stupid guy that I believe that this guy is good. Which means I call guys like Peter and said, you know what, I like this guy, I like this company, why don't you take a look and tell me what you think. I don't want to be the only guy signing the first check. I usually said, okay, I like this, I want to sign this check, but if and only if you can convince these 4 or 5 guys that you're smart and you're going to deliver. And that reputation check goes from me and other VCs or angels that were doing basically the same thing at the same time, how we share our own opinions at the end of the due diligence process. But it's not a classic due diligence process that you will see from Kroll on the big M&A world. In our case, it's guys talking with guys and sharing our own experiences.
In tech in general, anywhere in the world, you can find some people who know those people.
Yeah.
So we've actually kicked people out after a week who have come into our program even with being part of our full due diligence because they had a lot of people from the country they were in saying they were great, and when they weren't, they were gone. And they have a great idea and a great business, but the guy was just a little too cocky for the kind of culture we've created. So we spend a lot of time doing a lot of individual due diligence and asking even more now to really understand what's driving that person, why they're doing the things they're doing, how they created the team, their long-term strategy, and if they're coachable. And in fact, why they want to come to Miami. We're picking people who are likely to stay in Miami and grow world-class tech startups in Miami. So we spend a lot of time with those people. You can't fake it for too long. It's like dating, right? Eventually somebody says something jerky, and then you know. So it's really about making them comfortable and then figuring out if they're the real deal or not.